Okay, so you're probably like me right now. You're checking your phone. You're looking at that Bitcoin price. And you're like, whoa, what is going on?
It's been wild, hasn't it?
I mean, up, down, big swings.
Yeah.
It's enough to give anyone like a little bit of heartburn.
Yeah, a lot of people are feeling a bit queasy looking at those charts.
So instead of just riding the roller coaster, blindfolded, let's actually figure this out. Let's do a deep dive.
Exactly. Let's get beyond those headlines and see what's really driving this volatility.
Yeah, because there's always a story behind the numbers, right?
Always. There are real dynamics at play that we need to understand.
So we're talking specifically the past few days, that big drop on Monday night, and then what? Where do we go from here? The next week, 2 weeks?
Right. We've got some great analysis to look at. Really gets into the mechanics of the market.
And also what's happening like in the bigger economic picture.
That's crucial too, because Bitcoin doesn't exist in a vacuum.
No, it does not. So let's start with, let's just lay it out there. Last Saturday, Bitcoin was around $86,000. Then Monday night, bam, it crashes down to under 77,000. What happened?
Okay, so that drop. What's fascinating here is it was likely triggered by something called forced liquidations of leveraged long positions.
Okay, now hold on. Break that down for us. What does all that mean?
Sure. So imagine you're a trader. You think Bitcoin is going up, up, up. You want to make a big bet on it, but you don't have all the cash.
So you borrow.
Exactly. You borrow to amplify your bet. That's leverage.
Risky?
It can be. So now what happens when the price suddenly drops?
Well, you're in trouble, right?
Right. And to protect themselves, exchanges have these automated systems. If the price drops too far, they automatically close out these leveraged positions.
So you don't end up owing more than you have.
Exactly. It's a safety net. But it can lead to these really sharp drops.
Like a cascade.
Right. Because those forced sales can push the price down even further, triggering more liquidations.
So it's not necessarily that everyone suddenly thinks Bitcoin is worthless.
No. It's more of a technical thing, driven by these automated mechanisms.
Okay, so that's the crash.
Sure.
But then it bounces back, right? Tuesday morning, it's already back up to 81,000 and 83,000 that night. How do we explain that?
Okay, so think of it like this. Those forced liquidations, they can push the price down too far, too fast, below its real value.
So it's like a sale.
Exactly. Suddenly, Bitcoin looks cheap, and those who are waiting on the sidelines see an opportunity.
Buy low.
Right. So they start buying, and that pushes the price back up.
Towards more natural level.
Yeah. And we see this happening all the time in markets. Things overreact, then they correct.
So that rebound to 83, maybe even a bit higher towards 84,000, it's the market kind of finding its footing again.
Exactly. It's closing those gaps that were created by the panic selling.
Okay, but the analysis we're looking at, it's saying we shouldn't get too excited about this recovery, right? Doesn't mean everything's fine.
Right. It's important to remember those underlying issues that caused the drop in the first place. They haven't gone away.
Okay, so looking forward, the next week or two, what should we be prepared for?
Okay, so for the next 7 days, the analysis suggests relatively low volatility.
So a bit of a breather.
Yeah, things might settle down for a bit, but it's probably just the calm before the storm.
Uh-oh. What kind of storm?
Well, the analysis indicates volatility might pick up again in the second part of next week.
And which way is it leaning? Up or down?
Sadly, the current analysis leans towards the possibility of more downward volatility.
Not what we wanted to hear.
I know, and this isn't just based on Bitcoin itself, it's connected to the bigger economic picture.
Right, because Bitcoin isn't just floating around in its own little world.
Exactly. It's part of a global system influenced by all these other factors.
Okay, so let's talk about the bigger picture. The analysis mentions this idea of capital flight from risk-on assets to risk-off assets. Can you explain that?
Sure. So when the economy looks shaky, people get scared. They want to protect their money.
Makes sense.
So they pull their money out of risky assets. That's things like stocks or, you guessed it, Bitcoin.
Because those are seen as risk-on assets.
Right. And they move their money into risk-off assets, things that are seen as safer, like gold or government bonds.
So it's like seeking shelter from the storm.
Yeah, exactly. And we see this happening right now. The price of gold has been steadily climbing since December 18th.
December 18th. Interesting.
Yeah, that was the peak of Bitcoin's big rally in late 2024.
So as Bitcoin was hitting its high, people were already getting nervous and moving into gold.
It seems that way. It suggests that broader sentiment was already shifting towards caution.
Okay, so then the big question, what's making people so nervous? What are the risks they're seeing?
Well, A major factor is the growing concern about a potential recession in the US.
Oh yeah, we've been hearing a lot about that.
The analysis even cites a 40% probability on Polymarket.
40%. That's not insignificant.
No, it's a real concern. And a key driver of this fear, current US trade policies.
Ah, the tariffs.
Right, those tariffs on imported goods, they're starting to have some negative effects.
Like what?
Well, first, they make those imported goods more expensive, so people buy less. That can slow down trade, which hurts economic growth.
Less stuff moving around, less money changing hands.
Exactly. And then the higher costs of those imported goods, those get passed on to consumers.
Meaning prices go up for everyone.
Right, which leads to, you guessed it, inflation.
So it's like a double whammy.
Yeah.
Slows down growth and drives up prices.
Exactly. It's a recipe for a recession.
Okay, but didn't we just see some good news on inflation? The February numbers were better than expected, right?
That's true. February did offer a glimmer of hope, but the analysis warns that most of those tariffs, they actually only went into effect in March.
So their full impact hasn't been felt yet.
Right, so the February data might not tell the whole story. A lot of analysts are expecting inflation to jump again in April.
So this recession risk, it's not going away anytime soon.
Unfortunately not. And if the economy does slow down, all markets are going to feel it.
Including Bitcoin.
Especially Bitcoin. It's still seen as a riskier asset.
Okay, so what about that Bitcoin analysis we were talking about? What's this analyst, Matthew Hyland, what's he saying?
Okay, so Matthew Hyland's a technical analyst. He looks at charts, price patterns, all that stuff. And he's saying to watch a key level, $89,000.
$89,000.
Yeah. He says if Bitcoin can close above that level on a weekly basis, it could signal the end of this downward trend.
But that's a pretty big jump from where we are now.
It is, which means in the short term, he's still pretty cautious.
Okay, and if we don't break through that 89,000, what's the downside look like?
Well, he's flagged 74,000 as a potential support level. If that breaks, he sees the possibility of Bitcoin going all the way down to 69,000.
Wow, that would be a huge drop.
It would. And interestingly, he connects a drop to those levels with a potential unwinding of what he calls the Trump trade.
The Trump trade?
Yeah, it's the idea that a lot of the optimism in the markets, including Bitcoin, was driven by expectations around certain policies.
And if those expectations don't pan out?
The market could correct sharply.
Interesting. So it's all connected. The policies, the economy, the sentiment, the technicals.
It always is.
Okay. And finally, the analysis mentioned something about historical patterns, right? Challenging times for Bitcoin often last until the middle of the year.
That's right. Historically, mid-year has often been a turning point for Bitcoin.
But it also mentioned 2017 as an example where things turned around sooner, in late April.
Right, and that's the key takeaway. History can give us some clues, but it's not a crystal ball.
Yeah, every year is different.
Exactly. We need to stay flexible and be ready to adapt to whatever comes our way.
Okay, so big picture time. That Monday crash, it looks like it was mainly a technical correction. People getting scared, those leverage positions getting liquidated.
Right.
But it doesn't mean the bull market is back.
No. We could see a bit of calm for the next few days, but then more volatility later next week.
And it could be more downward volatility, unfortunately. And the big reason for all this uncertainty, the economy. Recession fears, trade wars, inflation worries, it's making everyone nervous.
Yeah, it's driving people towards safer assets like gold.
And that's bad news for riskier assets like Bitcoin.
It is.
Plus, we've got that key level to watch, 89,000.
Yeah.
If we don't break through that, we could see some serious drops.
Potentially down to 69,000.
Wow. Okay, so next time you're checking that Bitcoin price on your phone, remember it's not just random numbers going up and down.
It's not.
There are forces at play, both within the Bitcoin market itself and in the global economy.
Yeah, it's a complex system.
And understanding those forces, it's crucial if you want to navigate this space successfully.
Definitely.
It's a lot to think about. Individual choices, global events, the future of money itself, it really makes you think.
It does. It's a fascinating time to be involved in this space.
All right, that's our deep dive for today. Thanks for joining us. We'll see you next time.